All right, we got a lot of things going on, so we're going to hit the ground running here. We've got top trades joined by Greg Guenthner, our top trader here at Paradigm Press. And he was also a man that called the big Santa Claus rally that was happening in December. Then we start getting later into December, things start turning around a little bit. And now here we are in early 2024. Markets are choppy and they're starting to differentiate the good traders from the bad. And then if you went all in one way, you could be looking at the wrong setup. You got to manage your money, those sort of things. So we're going to cover a lot of that stuff. Let's go over a little bit of the agenda real quick. We want to cover some the big elephant in the room. We've got the Bitcoin ETF that got approved, and we've got a lot of action in Bitcoin and then some of the surrounding stocks. So we want to cover that in depth. We want to talk about some tickers in particular. Gunnar has labeled sort of Apple and Tesla in one bucket, and then you've got Nvidia and AMD in another bucket. So he wants to break those down for you as well. We're probably going to we got a bunch of comments about Palantir, so we want to get to that as well. So a lot of things going on. Then we've got some exciting charts, some stuff that he's genuinely excited about to look at today, and some top trades. But the thing we want to kick off with, I was just talking to Gunnar in the green room, is the big reason why we're seeing stocks down today. So, Gunnar, why don't you kick us off? Why are stocks down today? And then let's start going into things that you like.
Well, we've been in a bit of a choppy environment for the past couple of weeks. You guys remember when the calendar flipped to January, all of a sudden, that big melt up rally that we were enjoying in November and December, that turned south. And we had a bit of a quick pullback right off those levels. And ever since then, we've been sort of ping-ponging around back and forth. We really haven't seen the big participation in these up days that we had been seeing. As recently as just a few weeks ago. So we have that to contend with, and now we're seeing dollar strength come in and sort of like bully things around right now. The dollar had been trending lower all throughout November and December, and that was helping buoy risk assets. Obviously, everything from precious metals to other commodities to stocks, all that stuff was moving higher, thanks in part to a very weak dollar in November, December. And now we're seeing the exact opposite. We're seeing the dollar start to creep higher right now. And we go right here, and you can see I pulled up a DXY chart right here, the dollar index. You can see it powering higher today after getting above 102.50 on Monday right there. What do you notice about this chart? The first thing you should notice is, like we talked about right here, the dollar was very strong when the market was correcting during the third quarter. From August, September to October, it topped out and rolled over, and now we're seeing it start to bounce. If I wanted to draw a line on this chart, this is what I'd be thinking right here. And again, it's an art, not a science, but you can see here, there's definitely a change in character in the dollar right now. We had a very, very strong downdraft in the dollar, getting as low as teasing that 100 mark right there, right in the last week of December. And since then, we've seen this counter trend bounce. It consolidated for the most part during the first couple weeks of January, and now it's beginning to push higher right here. We are seeing a little bit of a change, obviously. It could reverse and close lower today. It could chop along from here, but I think the main takeaway here is this big fat downdraft that we enjoyed from the end of October through the end of December appears to be over for now, and we're going to see if it can catch and really push above some of these levels. You can see here this 103 level right here. This is the area where it topped out back in early July before it whooshed lower down there below 100. This is also a level that it consolidated at when it was moving higher back in August. So this might be an important level for the dollar. And if it could continue to kind of rampage higher here, that's going to be trouble for risk assets like stocks. And it's going to be trouble for precious metals. And it's going to be a bit of a headwind that we're going to have to overcome over the next few weeks. And it could lead to a bigger pullback in the averages, which, not necessarily a horrible thing, because we've gone straight up for the past couple months, and now we're entering kind of a different market environment. I like to call those rallies disbelief rallies, when you're in a situation like we were back in the fall. And if I pull up a chart of the S&P, you can see what I'm talking about. Everybody got way too bearish down here. And then when the market started taking off, nobody believed it. And so we had a situation where stocks went up, 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 up. And then as that trend develops, more and more people tend to hop on. They tend to say, okay, I need to get involved. I need to get involved. And when I say people, I don't just mean, you know, retail traders. I'm talking about professionals as well, hedge fund managers. They see the market moving against them and they say, okay, we were short and now we need to get involved in this trend. Well, we could be getting to the point here in this trend where more people are involved and it's time to start punishing people on the long side here. And it's time to chop along, or maybe it's time for a bigger pullback. You know, in the moment, it could feel bad if the market goes down 5, 6, 7%, but that's perfectly normal action. The market can't move in a straight line for you know, forever. So we had basically what I would consider almost a straight line move from those October lows all the way up to January, and now is where things are going to get a little bit tricky, and we're going to see different forces at play in the market right here.
Yeah, and then just breaking down that one thing as a trader, talking about the dollar, because I'm interested in how you think about that. Is the dollar controlling all this? But like, how do you think about, or how do you explain that to someone that might be new to trading? Like, why should they care about the dollar?
Well, if people are buying the dollar, then they're fleeing to something safe. Um, So the dollar tends to move in the opposite direction of risk assets. If people are scared or if they're worried, they're going to be putting money into dollars. If they're not scared and not worried, they're going to be putting their money into risk assets, into commodities, into stocks. So that tends to be the major relationship. And sometimes it changes. You'll have a situation where the market can move higher while the dollar is moving higher and vice versa. But for the most part, that's the general relationship we're looking for in the markets right here. So this could be a sign that expectations are changing a bit, that people are reassessing where the market might be, where the economy might be in 6 months from now, and they are adjusting accordingly. It could just be a blip on the radar too. Like I said, we're going to need to see how the dollar index settles today, how it follows through from here. But I think the strong downtrend that we enjoyed from you know, late October into late December is probably gone right now. We could just be in a period of chop. And as you can see, like going back, this is not the easiest chart to sort of like kind of figure out where we are right here, looking at the dollar index. It's been very choppy ever since coming off those highs in September, October of 2022, when it finally exhausted that huge uptrend that it was in. And obviously it bled off a lot of that. But ever since then, we've been in kind of this choppy mess right here. And I think that's pretty normal, because you know, when you come off of a strong trend and then you have a hard reset, I think there's going to be a lot of jockeying for position because people really don't know what to do. And we're seeing that in Bitcoin right now. We're seeing that in the crypto miners. You know, you have these periods where you have these huge bull moves, these huge pushes, and then you have the big give back after those periods. And then you're going to have a period of chop. You're going to have this period of indecision where no one really knows who's going to be taking control of this move. Is it going to be the bulls? Is it going to be the bears? And I think that's playing out kind of across the market right now, across asset classes. It's not just stocks. It's not just the dollar. It's crypto as well. There's a lot of chop and there's a lot of jockeying for position right here. It's a new year. We've come off this big disbelief rally, and now folks are scrambling. They really don't know what to do. And so we really need to take that into account when we're looking at things like stocks that are breaking out. Are breakouts going to stick? Are the strong trends from November, December, are they going to be the market leaders moving forward into Q1 here? We don't know yet. And that's this kind of stuff we're trying to work through right now to better position ourselves in the market.
Yeah, and that's a good point. It's some of that layering that you always talk about, because I would assume some of the small, like just the single stock charts you look at now, you'd be like, oh, I think I could trade this. 2 months ago, you traded and you kind of expect it to follow through on the upside. Now you're saying the big picture has changed. So that top layer has changed. Now, when you're looking at individual stocks, they might not follow through. So you can't bank on that as much as you could in a stronger trend. Okay, why don't you kind of segue us a little bit there? We have a lot of people. We had the Bitcoin ETF just get approved last week. And then since then, we've seen Bitcoin pull back. So why don't you break down what we're seeing in Bitcoin, into the crypto stocks and that market? And for anybody that's watching, go ahead, comment below, add in comments, say hi. And if you've got any questions, go ahead and throw them in now.
Yeah, so Bitcoin, it feels like we're in kind of a classic sell the news moment for Bitcoin right here. And that doesn't mean that I think Bitcoin's going to go right back down to 25K. I'm not super bearish off of all this, but you know, judging by the way that the Bitcoin ETF news followed through, tells me that this is kind of a sell the news situation where everybody was anticipating the approval. Everybody got all bulled up. Everybody assumed we were going to break out and move higher. And when that wasn't the case here, you had some selling come in. And I think that, you know, this is true throughout crypto, not just through, you know, Bitcoin, Ethereum, and everything else, but also through the crypto mining stocks. And again, it comes down to what kind of environment that we're in. We had the big push higher in Bitcoin. We had the consolidation heading into 2024. We had the big breakout here on the 8th, and then this was the approval right here. And you can see the big tall wick on the upper end of this candle right here, where everybody tried to push Bitcoin up toward 50K, and it failed. And then the next day, down 7%, and now it's back into that range right here. This is important because when you have a situation where everyone's expecting an asset to do one thing, and in this case, Bitcoin, everybody was expecting it to explode higher, and there were people throwing around some very big price targets for Bitcoin. They might come true a little bit later, but everybody was expecting big things to happen to Bitcoin just in the first quarter right here, just over the next few weeks. When this doesn't come to fruition, then what happens is everybody that got in late, everybody that chased this move up here in the high 40s, they get stopped out of their trades, they get worried, and we're back here in this range, and we could be choppier for longer in Bitcoin just because it needs to bleed off some of that excess enthusiasm. This is just behavioral finance. This is just how markets work. It's how people think who are involved in these trades. And you can see it across asset classes. Like I said, it's not just in Bitcoin, but I mean, we talk a lot about Mara. This is one of the big Bitcoin miners that we talk about. And this chart is very telling about the action that's happened in here, because I think a lot of people were just way too excited. And we talked about this in real time too, in at the trading desk, in the chat, here on these calls, about how you could buy some of these breakouts along the way right here, but after mid-December is where things get a little crazy. When you see charts start to hockey stick like this and go parabolic and just start moving straight up, gapping higher and higher every day, getting very overbought, those type of charts are not going to correct sideways. They're not going to post, for the most part, they're not going to post these very tight little candles and consolidate right here. There's going to be a lot of give back, and that's exactly what we saw here with Mara. This is the Bitcoin ETF approval right here, down 12% on the day after trying to push higher. It was, I guess the Bitcoin ETF was approved, what, Wednesday night or Thursday morning, and there you go. Up to 29 bucks, and then closing right down here to 22, and then the downside follow through right here. So it needs to give back all of this move right here. So anybody who bought with the intention of holding and not just flipping intraday, anybody who bought Mara right here between, I would say, December 18th and December 27th, they get trapped in a losing trade. They get scared out, and you have this hard reset right here. And now we need to go back and look at these levels and say, okay, is Mara going to hold, let's say, the peak here from mid-July? Is it going to be able to consolidate here? Or does it need to give back even more of this big parabolic move before it can really reset and get its act together and chop along? Now, another important hallmark of charts like this is that they're probably not going to continue to spike higher after resetting either. They're probably going to need to chop along and get into another low volatility zone and start to consolidate before they can really push higher again. And we've seen that time and again with Bitcoin, or Bitcoin related assets, and it moves faster. So it kind of gives us good examples to go through on these daily charts. But you can see here, back in June, when it blasted higher right here, it had to give back all that move. It tried again right here, but that was way too early. It still needed to carve out a rounding bottom here before really exploding higher again and taking off. And that reset took what? From the peak right here in mid-July, it took until October. And again, every situation is unique. This was obviously a weak period for the market. People were very bearish, heading into the fourth quarter right there. But at the same time, you can see the amount of time it takes. It takes time to bleed off a euphoric move like this. I mean, think back to, and this is an extreme example, obviously, but think back to the dot-com bust. You know, the NASDAQ and the dot-com darlings, they peaked in March of 2000, and the market didn't really start moving higher again until the Iraq war started in spring of 2003. It took 3 years for those stocks to reset. And it's going to take Bitcoin, Mara, and some of these stocks, it's going to take them time because there was way too much hype heading into it. Too many people trying to position themselves ahead of that move, and then it turns on them. So I would just say
Yeah.
it became a crowded parabolic trade, and now we're seeing the need to reset from here.
Yeah, that's a really good chart. I mean, if you leave out Mara real quick, I mean, it's just a really good chart to learn from because you guys, you made money in that hockey stick, but you're in and out. And if you would have been playing a little bit longer term options, you wouldn't have made money. Or if you got greedy, you wouldn't have made money. And it's a good example of like how, again, that psychology is just another layer of this, but how psychology works. You had a lot of, you can call it dumb money, you can call it like last to the trend or whatever in that December range. And those are the people that just thought it was going to 45, 50, 75, you know? And then when it didn't, they're like, I'm out. And they go out in droves. And then all of a sudden it pulls some of those other people that were in during the a little bit smarter part of the run up. It's all out. And again, we do this every week, but we talk about Mara. I hold Mara, so I have to disclose that. Um, but I'm more of a longer term
Right.
on holding those shares. But yeah, this is a good one to like to understand because what we want to do here at Top Trades and then what you do in the trading desk, Gunner, you want to educate people enough so that they understand what's going on in these moves. So we're never that dumb money. We're keeping an eye on the trends and we're being smart, money management, trades, like how we're timing them out, all that stuff. This is a really good chart to show that.
Yeah, and for the record, like again, like I feel like I have to repeat this a lot, but I'm not bearish. You know, crypto in the longer term. I mean, I don't really know how it's all going to unfold, obviously, but I don't think this is a reason to say. I don't think this is a major top. I don't think this is a reason to sell everything. And I think we need to talk about things in time frames. Like you said, if you're holding shares of something and you're not trying to play short-term swings with options or something like that, then you obviously have a different mindset about your trade than someone like me who's looking to sort of just snipe and grab some gains while I can. So I think like with the new Bitcoin ETFs that are out there, I think that's a great way to easily play some of the longer term trends. It's probably an easier way to buy some of these dips and that sort of thing for people who aren't looking just to play pure breakout moves in these assets. So overall, it's probably bullish in the longer term. But again, this is just a shorter term positioning situation where we had way too many people anticipating the exact same thing happening in the market. And you know what happens when we're all on the same side of the canoe? It's going to flip over and we're going to get wet. So that's just how markets tend to work. And we just have to be cognizant of that when we're moving in. So if you're thinking about buying stuff longer term, and if you're thinking about looking at like a Bitcoin ETF or something like that, wait and see how this choppy period plays out so that you can get a better entry price for a longer term hold is what I would say.
Yep, exactly. All right. I appreciate you breaking that down. Where you want to go next? What other charts do you like?
Well, just looking at the action today, I want to talk about some of the things that we're seeing in the overall market because speaking of crowded trades, we obviously have a crowded trade on our hands. And I don't want to be a broken record about this, but I think it's important. But we have a crowded trade on our hands with the Mag 7 stocks, the Magnificent Seven, the FANG Plus names. There's a million different names for them. I'm talking about the big mega cap tech stocks that everybody wants to be involved in. If you remember from some of the stuff we talked about in late December and earlier this year, one of my big predictions leading into the new year was that we're not going to see the Magnificent Seven stocks outperform the way they outperformed in 2023. I think we're going to see this group kind of split up. I think we're going to see different performance from different stocks. And I think we're going to see a lot of smaller and mid-cap stocks outperform during the first half of 2024. Whether this happens to play out remains to be seen. But what we're seeing right now is we're seeing some different action, and we're seeing some of these stocks not moving in tandem with others. And you can see here from the heat map how that's playing out just on the daily basis. It's just 1 day performance. This is how the market looks right now. This is the S&P 500. Green is good, red is down. But you can see here, we're seeing a lot of positive follow through from the NVIDIA breakout. NVIDIA had been toying with that $500 level for some time, and it finally broke out. And it was one of the only breakouts that was really pushing higher and holding last week. AMD is following suit today, up almost 8%. MU is looking really good. We're seeing semiconductors really start to push higher right here. while Apple and Tesla are being kind of left behind. Tesla is improving a little bit as the day goes on. It opened up down about 2%, but we're seeing some cracks in some of these mega cap charts, while we're seeing others plow higher. And I think it's really important to separate these. Because if we look at NVIDIA right here, and we were looking at this last week, I believe, but you can see the very clean, obvious breakout at at 500. I mean, this couldn't be clearer. This was one of the most watched charts out there, and you can see how it was coiling up to that point, and bouncing off 480 and then just exploding higher last week, and it's following through here. Obviously, extremely overbought right now. I wouldn't go chasing NVIDIA here. I'd wait to see how this chart levels out, how it resets, and that sort of thing. But we can't deny the strength in this name. I still don't think it's going to be up 250% this year. I don't think it's going to be, a 500% gainer over the next 2 years right here. I think this name is going to need to settle down. I think a lot of the expectations are getting baked into the pie right here, and that's something to keep in mind. But we can't deny price. We can't deny what we're seeing right here. And this is an incredibly strong breakout that's dragging these other stocks higher. You can see what's happening to AMD right here. It was very strong during the melt up, and it got a little choppy toward the start of the year. You can see here big gaps lower, and it was threatening at 135 right here. Well, it's already pushing back up to 160, doing a really nice job gapping higher and breaking above 150 today. This is a big stock, and it's up almost 8% on the day. I would say that's a pretty substantial move right here. And when we look at SMH, which is the semiconductor ETF that I like to watch, you can see here that that's really helping push SMH back up toward those December highs. And so I really want to look to see, this is an important market leader, obviously, and we talk about this a lot. Can the semiconductors take out these December highs and continue to push higher right here, or are they going to have some trouble as a group right here topping these melt up highs right here? I think that's going to say a lot about the resilience of this market, because like I said, over the past couple of weeks, we've seen a lot of these rallies start to narrow. We haven't seen the participation across the board that we've been seeing. And a lot of that this morning has to do with the strength of the dollar. Dollar is up, rates are up. And when rates are up, the more speculative, the more growth stocks are going to take a hit. And that's what we saw earlier today. That's what we saw late last week too. If you look at the ARK Innovation ETF, this is kind of our tech growth proxy right here of the popular tech growth stocks. You can see here where it's right back down into its range. It's been working on this base for some time, and I've had this line up for quite a while on this chart, and I'm going to extend it right here, just to give us an approximation of what's happening. No, it's not in free fall today, but it's not up. And if it does close down here at this level, it's going to be its 1, 2, 3, 4. This is going to be its 5th trading day lower right here. So a lot of these stocks in this group are really starting to struggle. And again, if expectations are changing, if the market is hinting to us that expectations are changing for rates, if they're changing due to the dollar, then these stocks are going to be weak, and that's exactly what's happening right now. We have to respect that and to see where this catches and where this moves forward. This could just be a blip on the radar right here, or this could be more trouble and just lead to more chop in this zone right here. We could be dealing with kind of a false move above this big base, this big multi-year base that it's been trying to form, and we could just be dipping back down to this level. And if it can't catch and start moving higher back up toward 50 right here, then I would say that many of these stocks, not all of them, but many of them are probably going to underperform. They're probably going to be choppy, and we're going to see those big intraday swings. Probably not as big as the Mars. We're not going to see 10% up days followed by 12% down days or anything like that. But we are going to see more difficult action, fewer stocks holding their breakouts, and we're going to have to be looking elsewhere for trades on the long side. Because when that list starts getting smaller, we make those lists of stocks that are starting to look good and are starting to move closer to breakout levels. When those breakouts start failing and stop following through, and that list starts to get shorter, then you're in a more difficult market environment. You're going to have to sort of switch up your strategies, for the next few weeks, if not, a couple months, if the market is entering a rough patch.
Yeah. Can you bring up SMH again? And again, this is just me diving in a little bit. I was at CES last week, so I got to see a bunch of the consumer technologies and all these different gadgets and all this stuff that they show out in Las Vegas. But the one thing was common, and some of the most interesting stuff I saw was at chip makers because they're like, hey, we've got this thing in production, and when it happens, it can do this. And one example, I think we sent a video around about this, but they had a great screen, and the screen had 60 TV cameras on it. And there was an AI tech that was monitoring all the things. So just imagine, or like pretend it's baseball games or football games or something. The AI is just monitoring everything and spitting out if you wanted to say, hey, I want to know every time there's a touchdown or this matchup or that matchup and whatever. And it's like it knows the batters, it knows what's happening, or it knows the football players, all these different things happening. That company doesn't make screens. They don't make whatever. They make chips. And the chips, like, can you take this chart out longer term? I'm just wondering, like, say this starts going to the upside, because this might be one of the few things that's like kind of a necessity. Like, if you want to have the best AI tech, it used to be you have to have NVIDIA, but it might just be you have to have one of the high-end chips from any of these manufacturers, and they might start minting money because you're going to have haves and have-nots.
Yeah, I mean, I think you're right. I think that's
And
already.
again, I'm guessing you know the charts. I'm talking fundamentally. Like I noticed it there. Like you got all these gadgets, but what do they actually run on? They run on chips.
Well, right, that's important to talk about, and I think that's already happening. I think the whole reason that Nvidia had such a monster year, coming off such low expectations heading into 2023, was the simple fact that it was the pick and shovel play for AI. And there was a consensus in the market that no one is going to be able to make the chips that are needed better than NVIDIA is going to be able to make those chips. And that was reflected in the share price. So that's a situation where the story starts lining up, the narrative starts lining up with price. And that could very well be the situation here.
Yeah.
I mean,
I like that chart above 160.
yeah, I mean, you should like this chart above 160 because again, leaders lead, and SMH has been an important market leader for a long time right now. If you remember way back when, um, during the secular bear market, our last secular bear that we had, following the great financial crisis period right there, nobody really liked to own semiconductors. They were considered cyclical, very difficult, fundamentally unsound stocks that, work sometimes, didn't work others. That's certainly changed over the last bull market, and they've become world-beating stocks. And you can see here, I'm always interested in stocks that take out highs before other groups do. If you're one of the first groups to start taking out your old highs when the market is changing, then that's worth paying attention to. And that's exactly what's happened with SMH. We've zoomed all the way out right here. These were the highs in late 2021. It bumped up against them back in the summertime before the market got weak again. But you can see here where we've already broken out and retested as early December right there in these stocks, and it's already moving higher. We could encounter some chop, because again, this is one of the only trades in the market that's really consistently working at the moment on the long side. So I'm very interested to see what it does in the short term after coming back on these melt up highs and getting that quick reset right there. But you're absolutely right. Longer term, this feels like a very, very important sector. It feels like it's going to continue to be a very important sector for, the whole AI hype that's happening all around us, which is becoming a very real thing.
Yeah. Yeah, I got to save it for another call, but stay tuned because we're going to have more. There's a bunch of things that are aligning. Yeah, it's more semiconductors, but like where the hype is going to become reality in some of these companies. And it's not what a lot of people think, but it's a good looking chart. All right, what else we got?
Well, a lot of people today were asking about PLTR, and I think that's another situation where we have kind of a crowded trade on our hands. We're kind of waiting to see
I own this
how
one
it
too,
shapes up.
just FYI. Mara and Palantir. It's like these are the stocks we talk about every time, so I had to do my normal disclaimers. I apologize, everyone.
No, it's all good. So we have a situation here where we had a bit of a failed breakout. You can see where it snuck above those July highs back in late November, and then it really never got its act together. It didn't really melt up with the rest of the market in December right here. I think that's kind of a sign that things are a little crowded in this stock. No, I'm not bearish on it. You can see here how it's just back in this big choppy range that it's been in for a while right now. And so if I'm looking at this stock, I'm thinking, okay, when is it going to flash a real change in character for me? It's still, channeling lower as of right now. You can see here we have, just a series of lower highs and lower lows coming off of those November highs right there. So I'm looking for, again, that change in character that's going to tell me, okay, this is leveling out. It's going to chop sideways or it's going to push higher from here. And right now I'm just not seeing it. Yeah, I'm drawing this line, and it tried to poke its head above this mark, late last week. But we're not seeing a lot of follow through. We're seeing a lot of tight candles right here. This is one of those charts that just might need to continue to rest right here. And again, really big move off of those May lows. It went from $8 to almost $20 in a big hurry right there. And what did we just say? If we compare this to Mara, again, very different companies. But the principle of how the herd is going to behave when they're involved in these stocks remains the same. We have a situation where we had a very powerful rally, and it had to give a lot of that back, and it set up again. And this was a very choppy rally that followed after it off of those September lows right there. We had a big rally up towards 17 that failed and had to come all the way back down. We had a big gap higher on earnings where the stock was up 20% in a day. It ran off that gap higher and attempted to push those new highs and failed off of that. And so for now, I'm thinking, this looks like more chop to me moving forward. Now, what's not choppy and what people are already talking about in the chat right now is another thing I wanted to talk about is uranium. Uranium has been a very difficult trade just because of the action that we've seen over the past few weeks right here. This is the global uranium ETF, URA. We had a situation where it was setting up beautifully. And if we were looking at this and pretend like this mess didn't happen right here, but if we were looking at this in late December right here, it was teasing a breakout there above $30, above $30. Then we had a big gap lower right here. On December 28th, it got absolutely destroyed, down 7%. And then what happens? Well, it just became a total mess.
Yeah,
Gapping
shook
down
out all
7%.
those people that wish they were still in it.
Oh yeah, I mean, what a huge shakeout in this thing. It's not the easiest group of stocks to trade. It's super volatile, and you can see that even back here in September, where it posted a really nice move from 20 up to 28, and then when it goes down so fast. So it's really difficult to grab the meat of these moves here sometimes. But we had a situation here where you have that big bearish engulfing candle, and then you had a 3.5% down one day, followed by another 3.5% down, followed by another 2.5% down. I mean, this thing really got slaughtered. And then it set back up and tried to move. If you were trying to play this breakout right here, it broke out a little bit. And then you had back-to-back days of opposite action, down 3%, up 3%. And then you had this situation, the big gap lower, the recovery, big volume though. Look at these big green bars coming in. So, I mean, buyers are buying. They're pushing this thing. And then you have the big gap here up 7%, and now it's just going into space. And you guys know CCJ is the one I was looking at. But again, the same thing, the big, huge shakeout right there, followed by pow, this big move higher. And even as recently as, like, I would say Thursday, it was still, it was still no guarantee that this thing was going to break above this level right here. And then instead of like letting anybody get on board, it gaps higher. So, I mean, very typical in what's happening with uranium. Very tough trade to make right now. Tough to buy some of these candles, and very tough to buy this gap right here. I think that we could be in a situation where it's entirely possible that this gap holds and we just continue to float higher. Or on the other hand, we could have a situation where it really needs to fill this gap, and we have a day where it's down, 7, 8, 9% and fills the gap into the mid 40s before catching and moving higher again. As a trader, that would be the preferred action for me, because it's very difficult to buy some of these big gaps that drift higher right there, because you could be in a situation where it just hits the wall and you get a big red candle like this and you get stopped out of your trade, and it just stinks and it wastes your time. I'd much rather see something like this fill the gap at least partially, and then show it's going to bounce and attempt to run higher from there. So, I mean, lots of different ways to look at this. I'm excited that it's moving higher, but again, if we're going to actively try to put on a trade and we want to get involved in something like this, we really have to pick our spots carefully, because you can see what it can do to you. It can really buck you off the trade, and then you've wasted your time and you're stuck on a loss on a stock that's generally moving higher. It's just, being kind of a pain to get involved with.
Yeah. Let's see. Do you want to cover? I had in your notes looking at Apple and Tesla versus Nvidia and AMD. Do you want to dive a little bit more into that?
Yeah, we got a little sidetracked, but we can go back into that. Let's go back into some
Well,
of
it's
the mega
good. We're
caps.
answering where the questions are coming in, the
Yeah.
comments are coming in. We're answering them. We're good. You're looking good.
Yeah, so we have the Nvidias of the world, like we were talking about, and I mean you can see it's just, I mean it's relentless today. This thing is not stopping right here, and AMD is up big. So we have these trades that are working right here, and then we have situations like Apple and Tesla, which look kind of the opposite. Obviously, this is a very different chart right here with Apple, and Apple's kind of reacting accordingly to some of the news that's coming out. Um, there was that little news item, and I really haven't dug too deep into this about the Supreme Court rejecting its appeal earlier today. So it was kind of gapping lower on that news and on the news of iPhone price cuts in China. So we have kind of a confluence of bad news with Apple combined with kind of this ugly action that we've seen in the chart. Apple was unable to break out in mid-December and take out those July highs convincingly, and it's been trending lower ever since then. So unlike the Microsofts and the Metas and some of the other better looking Mag 7 stocks that really held up the market during the third quarter of last year, Apple did not. Apple had hit a rough patch here, had some very choppy action where it bounced between 200 and the high 160s right here. Not a great looking chart. The rising tide really helped it out. In early November, it did push off the lows right there, and it consolidated a little bit, and then it attempted to break out right here. It was looking great on December 13th and December 14th right there, and it looked like it might just retest to move higher. It has not. We have a big gap lower there where it was down almost 3.5%, and that was to start the new year right there. And then it hasn't really touched that mark since. It has not done well in 2024. You can see here, this is the last trading day of 2023, way up here in the 190s. It hasn't sniffed the 190s since then. In fact, it's still down here in this choppy little range in the 180s, and it's nowhere near where it opened on January 2nd. I would consider that pretty bearish for a stock like this, and maybe this needs some more chop right here. It's been a while since this thing has posted new highs. I consider this, again, this is another one of those charts where you look at it and you say, this might be a false breakout where it's going to need a lot more time to sort of churn in this area right now, and people might be rotating out of a stock like this. The same thing goes for Tesla. This is another one of the Mag 7s that is not so magnificent at the moment. And you can see here, that's the old line I was drawing on it right there, because if you remember back in mid-December, I said, and this was right around in here, I said, Tesla's really shaping up and looking like it might want to break out. It had not really posted the magnitude of a move that you would have expected a stock like this to post off of those October lows. It moved off of this $200 move right here, moved from 2 to 250 right here, and then stalled out right at the start of December. So we have a lot of other tech names, a lot of the other Mag 7 are moving higher in early December, and it totally left Tesla in the dust right there as it consolidated right there. It looked like it was breaking out, had a nice 5% up day right here, headed up to 250. And you can see here that is failing and rolling over right there. You can see the bearish engulfing candle right there, the big red bar that totally eats the bar, the green bar before it. That's an engulfing candle, and it's following through to the downside right there. And now Tesla is looking a little bit better today than it was earlier this morning. It pushed down to a low of almost 211. It was in the 212s right there earlier today. It is pushing higher off of that, but I don't really trust that move right there. I feel like we're in no man's land with a stock like this. And again, you can attach any narrative you want to attach to this, whether it has to do with, we saw that news late last week about Hertz ditching all its electric vehicles and selling them for a big discount. You get Teslas really cheap through them. Maybe people are having problems with the Cybertruck, or there's a lot of uncertainty, doubt around how well that's going to sell moving forward. We can attach whatever narrative we want to what's happening right here, but the price action right here is telling me to stay away from the stock. I don't really like it long or short right here. I want to see what it decides to do. Perhaps if you wanted to say something a little bit bullish about it, is the fact that it seems to want to hang on to this 210 level right here. It doesn't want to give that up just yet. But I would be very, very worried about this stock moving lower, maybe as low as the 260s if it can't hang on to this level, especially if it loses those October lows right here. I think if it loses those October lows, it's going to be a very obvious move lower for everybody right there, and it could get quick. But as for right now, a stock like this, I just don't see any reason to try to own it. It's just a mess. and there's better charts out there. The list isn't very long of the charts that are really good right now. But yeah, I meant to say 160s. But yeah, I think there's better stuff out there at the moment. And again, I think this is showing this sort of bifurcation in the Mag 7 where we have some like Nvidia that are just blasting higher, and then some like Apple and Tesla that aren't doing so well. I think that's indicative of just what's happening across the market right now, where everything is not moving together right now. The rising tide isn't pushing up every single stock out there. And so I think it's important to sort of take a step back and say, okay, what's still moving higher? Are we going to have breadth issues in this market? Is that going to eventually start affecting the major averages? If you were only looking at growth stocks last week, you would have thought the market already rolled over. But if you look at the S&P, it looks just fine. So are we going to be in a situation where breadth continues to deteriorate into this week, and we're going to see more and more stocks start to roll over? And is it going to start pulling the averages lower? Or are we going to see a situation like we've had over the past week or so, where a lot of the growthy stuff, a lot of the junkier stuff that rallied hard in November, December has hit a ceiling and now is beginning to move lower? And so that's really what I'm trying to pay attention to, right here, moving on, and sort of trying to adjust my trading strategies moving forward. Are we going to be able to sort of lean on short plays? Are we going to be able to play some downside action in the averages? Or is this just a blip in the radar, just sort of a recalibration of what's going to be leading the market higher? Because we still have semis working, like you said. We still have some of the big tech working. Some of it's not. A lot of the tech growth stuff is not working right now. So we're going to see how that all shakes out.
Yeah. And I gotta say, like, again, I'll give my little pitch for Paradigm, but Jim Rickards on talking about some of the fallbacks of EVs. Maybe that's playing into Tesla too, right? Mary said in the chat, yeah, EVs don't do well in the cold, and you're starting to get some stories. So then
Yeah.
all of a sudden, draw a line across the U.S., and it's like if you live above this, you probably shouldn't get an EV. It's starting to cut into that narrative a little bit. And same thing with Altucher and what he's doing over with Chris Campbell, talking about AI, Bitcoin, all those things. A lot of smart ideas and narratives coming out of that camp as well. So why don't we, Gunnar, if we've got time, there were three tickers that I just randomly saw that we could maybe cover for the group. I think I'll do them in order, but Intel, INTC, GM, and then GS, which is Goldman Sachs. Again, these are just random smatterings. I saw them in the comments. So maybe just some charts. Maybe there's something to say. Maybe there's nothing to say.
Yeah. INTC, I think, still looks good. I don't think we should count this one out just yet, because obviously big, huge candles here, big parabolic run up, for Intel, for, kind of a stodgier tech company right here. But it's been a pretty orderly consolidation right here. And maybe it just needs to revisit this 45, 46 area right here before moving higher. Obviously, I want to see what it's going to do. And we're kind of drawing the same line that we were drawing anything. We have a bit of a consolidation right here. It's flagging. Is it going to be able to, break above this move? And I would get more interested in it when it's above 48.80 into $49, just to show that it's taking out this recent consolidation right here. We're seeing the tight consolidation. We're seeing the volume drop. Everything still looks bullish with a stock like this. It's just a matter of if and when it pushes above that 48.50 level and really starts moving again. I wouldn't be overly bearish about it. I just would want to wait until it really starts working again to prove that it's going to bounce from here, because obviously market conditions, you don't know. But yeah, still looks good to me. And then what was the other one?
GM. Let's hit GM next.
General Motors. A little bit sloppier consolidation on General Motors. It's holding this gap right here, which is nice. This is obviously an important level right here, somewhere in this neighborhood, where it gapped higher. It put in this base, had a nice rally off the November lows right there, big gap higher, right here, up 9%, and then up another 6% right here. It just might need some more time. I would be looking at it to, if it's going to fill this gap right here, how does it bounce off of 34? If not, if it tends to hold this gap and push higher, when's it going to come out of this consolidation range and push higher? And then your target is going to be close to $40 for this in the short term. But if we go back and look at this, it's been kind of a choppy mess, but it is holding above these lows that it put in back in 2022 that it tended to revisit. This was not a stock you wanted to be long-term involved in on the long side in 2022 and early 2023, just because it was so messy. You see here, it just bounced around between 30 and $40 for the better part of a year. and then looked like it was breaking down right here. Maybe from a bigger picture, we're looking at, a bit of a false breakdown in this stock. It looked like it was totally falling apart back in early October. It was losing those 2022 lows, which is kind of a big deal right there, and it was immediately bought up. So we're well above COVID crisis lows. We're well above those big whoosh lower 2022 grinding bear market lows, and it's holding these gaps pretty well. I would say this is setting up pretty nicely, but I want to see it confirm that it's going to bounce higher. Again, looking at something like this, just because I don't want my capital to just be resting in a trade that's going to chop along. I think we have to be really choosy in this market, and buying something here while it's still in kind of whatever this consolidation period is right here, it could be dead money for a while, meaning it just chops sideways and doesn't do anything for us. I want to see the confirmation it's going to bounce and extend higher before I jump into a play like this. And then last one was Goldman Sachs and financials. I saw Steve-O mention that.
Yeah, if Steve-O asks, we have to answer.
Let's see. Yeah, I mean, financials look great. They have been leading, which is not bearish, by the way. We've seen XLF look really good. If we just flip to that chart really quickly, we've seen a nice push out of XLF. And remember, first week of January, when everything was taking a hit, XLF looked pretty darn good. Yeah, it's been a little choppy here, but it is looking a lot stronger than a lot of other groups on the market right now, and that's not necessarily bearish. And then again, we can draw some lines here that are pretty darn obvious. Not a bad thing by any stretch of the imagination, but you can see here, taking out those early 2023 highs right there, and it seems to be completing some sort of a base right here. I would say that looks pretty darn bullish. Goldman Sachs beat top and bottom line today. It's up modestly, not too exciting, but again, that could be just, gains were front loaded. We can see here what it did in December. Big pushes higher. This is a big company. And now it looks like it's just sort of consolidating below 390 and waiting to break out right here. Maybe this is a situation where it just needs to chillax and bounce around a little bit between 380 and 390 before really making a push toward 400 in those highs. And that would kind of complete this really ugly, back and forth bottoming pattern that it's been going at. And then it can maybe take a stab at those November 21 highs, in the 420s ish in that neighborhood. So I mean, that's my take on something like that. I think it's a good looking chart. It might just need some time right here, but it seems to be consolidating nicely and definitely one of the leaders off those November lows. So worth watching.
Yeah, we're heading into earnings, and that's a little bit more gambler centric, but it's decent looking at least right into earnings. We'll see what happens once the earnings reports come out. Gunnar, I just had an idea too. This is for a future call. We should do a call that we call TICKERFEST, and it's all we do. We just get everyone to write in as many tickers as they can write in, and we just cover tickers for as long. Well, we can't do it as long. You could probably do it for days, but just like one call. Anyway, we'll put a stamp on that one. That would be fun. TICKERFEST. It's coming. All right, I'll give you, we covered a bunch of ground here. So I'll go ahead and give you last words here. Anything that we missed, anything else anyone needs to know for the rest of this short week and where we go?
Yeah, I think it all comes down to the dollar and rates and how we react. The dollar looks very strong right now. And zooming in, I mean, we've already talked about this, but you can see exactly what's happening here and where the pressure is coming from. Is that going to continue? Are we going to continue to see breadth problems in the market? You can see right here, the averages aren't looking too terrible, and they've pushed off their lows right here, and we're just barely in the red. But if you look over here in this area, most stocks are down. Over 70% of stocks listed on U.S. exchanges are in the red so far today. I was scanning earlier this morning. I was looking just at large caps that were green so far today. At the open, there was fewer than 90. And then closer to the call, I ran it again, and it was more than 200. So, it did improve, and bigger stocks were moving higher off their lows, into, late morning. But at the same time, I think we are in a period of a little bit of uncertainty, a little bit of chop, and we're going to need to adjust our trading accordingly. This is not the type of market where we can just sort of grab anything that's moving higher and expect to make gains with it. A lot of the stocks that look really good just aren't working. So I want to see like how badly they're not going to be working. Number one, are we going to see some ugly reversals, or is this just a little bit of a speed bump before we push new highs? That's what's on my mind. Heading into this short trading week right here.
Awesome. Well, I'll echo what Cynthia said in the chat. She said, great presentation. I do appreciate your time, Gunnar, because I think week over week, and as we have more of these top trades calls, everyone's going to start realizing you look at the market in a different way, and you've got those layers set up of how to trade in different markets, what stocks you like, what sectors you like, and all those things. So we appreciate your time. Everyone at home, we appreciate your time as well. We'll be back on next Tuesday at 11 a.m. If you have any content or topics or anything that we can cover, including I saw Steve, he tried to rename, he said Ticker Palooza. I don't know. I like TICKERFEST. That sounds very enjoyable to me. All right, everyone. Thanks a lot for tuning in. Gunnar, thank you. We'll catch you next time.
Yeah.